What if I told you the world's most valuable company just crashed the entire global market? This is Kenya News Update today. Coming up, you'll discover how a single stock's earnings beat triggered a domino effect from Wall Street to Tokyo and Nairobi, and what this means for your investments. Meet Nvidia, the trillion-dollar chip giant that powers everything from AI to your smartphone. Last night, they reported blockbuster earnings. Revenue beat, profits soared. And then something shocking happened. The stock crashed over 5%. Its worst day in nearly a year. But here's the twist. This wasn't a failure, it was a success, and that's what spooked the entire world. The numbers were too good, the expectations were too high, and when the biggest winner stumbles, everyone runs for cover. For 9 years, Nvidia's rise powered a global tech boom. But in a single trading session, that story flipped. The S&P 500 fell 0.54%. The tech-heavy Nasdaq plunged 1.18%. Only the Dow Jones held on, adding a mere 17 points. The ripple effect is now hitting Asia as markets open. Japan's Nikkei 225, which just hit a historic high of 59,000 points, is set to open lower. Futures in Osaka point to a drop, trading at 58,470 compared to yesterday's close of 58,710. Hong Kong's Hang Seng futures are barely holding steady. Australia's market is flat, but here's what nobody's talking about: the contagion. This isn't just about one stock. Other chip giants like Broadcom, Lam Research, and Western Digital all slid. The entire semiconductor sector, the engine of modern technology, is flashing red. And for investors in Nairobi, from the NSE to your pension fund, this global tremor matters. When Wall Street sneezes, the world catches a cold. The stakes? Trillions of dollars in market value and the stability of your portfolio. For years, we've been told tech is unstoppable. AI is the future. But last night revealed a brutal truth. Even the future can have a bad day. The market's reaction is a classic case of buy the rumor, sell the news. The hype was so immense that even perfection wasn't enough. And then, something even more revealing happened. While tech collapsed, old economy stocks on the Dow barely budged. This is a seismic shift in sentiment, a warning sign that the decade-long tech party might be facing its first real hangover. But here's the part that will blow your mind. This pullback could be healthy, a necessary correction after a meteoric rise, a chance to reset before the next leg up. Or it could be the first crack in a massive bubble. The implications are huge. For Kenya's growing tech sector and for anyone with exposure to global markets, volatility is back. The controversy is clear. Some analysts say this is a temporary blip, a buying opportunity. Others warn it's the start of a much deeper correction. The tension is palpable. So what does this mean for you? If you're invested, watch closely. If you're waiting to jump in, this might be your moment. But the unanswered question remains, is this the end of the AI boom, or just a pit stop on the way to even higher highs? The nurses of the financial world just walked free from a murder charge, but the killer of market confidence is still on the loose. Do you think this market drop is a buying opportunity or the start of a crash? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking financial news that impacts your shilling.